Let's see if Gaby's on here. Here we go. Hey, how are you?
Hey, how are you, Nick?
Doing well. Sorry, I had some technical difficulty. I have like a little stand for my phone and like fell over, and I was like, oh my gosh, what to do?
Oh, it's
So
okay. I can see you perfectly.
turn up my volume here.
How's everything?
Oh, it's good. The weather here is like finally starting to get nice. So I was outside for a little bit today, and it's a nice.
No training today, huh?
Yeah, no training today. Just like take a break and like calm down and like gather my thoughts and sleep a little bit. And
yeah, it feels different when the market's not open. It's like you don't have to think about it, right?
Yeah, I know. Well, I still think about it, but don't watch numbers go up and down.
Yeah, you know what I mean. So it's nice to see you. Thank you so much for having me tonight.
Yeah, well, thanks for getting on and spend some time with me. I guess the pleasure is all mine. I know we had been connected through Nick Sandell and Sean, and they had spoken about you a number of times before, but and then recently Nick had done like a little IG live with you about the stock market. It's like, ooh, I would like to talk with her, and so it was a cool opportunity to kind of hopefully share some knowledge with my followers, and I think hopefully some good words of wisdom. I know a lot of people are like trading on the stock market right now. It's a little concerning if you're not careful. So hopefully we can impart some words of wisdom, and hopefully we can all learn something.
Yes, for sure. For sure, there's a lot of new people, so this will hopefully will help them. We'll give them some tips about. I'm very interested in what you have to say too, because you as a beginner, you can add a lot of value to those just getting started, and then I can share with people like the most common mistakes, what to avoid, and all that type of stuff.
Yeah. Well, so why don't you just like a quick high level? Can you tell us about like who you are, what you do, and just kind of like what makes you so great about like.
All right, so I'll introduce myself for the ones who have never seen me before. This might be the first time you've ever seen me. My name is Gabriela Berrospi, and I'm known as Gaby Wall Street because I'm the founder of Latino Wall Street. It's basically an educational platform. It's more than that. It's a movement that empowers the Latino community to learn about the stock market, to invest. We focus on options trading and stocks, right? So stocks and options are our main two things that we focus on. And it's no secret that the Latino community has been left behind in finance, and specifically women, right? You go to Wall Street, you don't see a lot of women, you don't see a lot of Spanish speaking. So our movement is breaking stereotypes and empowering them to not be left behind. So that's what we're about. I'm also in the Forbes Finance Council in the expert panel. I have my own column in Forbes where I write about all things finance. And I also collaborate with the panel to do different articles and content for the members. So that's something that I'm also involved with. I do that in English. So if you guys want to read my articles, let me know. And yeah, so basically this whole educational platform started about 1.5 years ago, and it's been crazy, since like the first time we exposed ourselves, because I wasn't on Instagram before. I'm basically kind of new, right? It's been approximately a year, February last year. It was insane, like the amount of interest people had. And the main question is always like, why weren't we taught this in school, right? Like if it's such a powerful way to generate income, why, in our school system, how come they're not educating us with this information? And forget the stock market for a little bit, but just like finance 101, right? Like diversifying your funds, getting ready for a recession or a crisis, just like very basic stuff, how to create a savings account and like what percentage you save, like very, very basic things that's not being taught. So
Yeah.
you only have two options, right? You either have to go find it and not be left behind, or you're going to be stuck in the system that you're not benefiting from.
Hmm. Yeah, that's really interesting. You say that. I didn't think about it until you just brought it up. But I've only taken one finance class, and it was my senior year of college, and it was part of my mechanical engineering degree. So it's very easy that I could have just skipped out, and it was really basic stuff too. So yeah, you're absolutely right. There's kind of a lack of education, even
Yeah,
just on the personal side of it.
so Nick, you're a little bit different. I feel like you have more knowledge than the average person because your major, you said, was engineering, right?
Yeah.
Engineer. Yeah. So how has that helped you with your trading experience? I know you mentioned you're still
Oh
kind
yeah.
of new. You still consider yourself a beginner, but you've had really, really good results. But how has that helped you with charts? Because you're doing day trading, and that's
Yeah.
obviously a lot of charts.
I think it's actually helped me quite a bit. Just the sheer like math number, like just from like not be, from a standpoint of not being intimidated by the material. It's no problem to me. I look at graphs, all day. I can look at an equation, understand how it's built, and understand like the inputs, and so if I'm looking at like a probability or a statistics model, it makes a lot of sense to me. So I guess on a surface level, the engineering kind of sets me up to just absorb the material very quickly. I understand it, but a lot of it is, I think, kind of on a higher level, maybe like some critical thinking skills too. Being able to piece together a lot of concepts is a really big thing with like engineering, right? You learn calculus, you learn physics, you learn chemistry, you learn strengths of materials, dynamics, and then they say, okay, go build a robot. Well, you got to take everything and put it together. And so that's kind of how I've looked at trading the stock market. Is I like to study different concepts, so like candlestick patterns, and like I like to learn about like how smart money moves and all of the like day trading indicators, and I'm trying to learn more about like the fundamentals and things. And so I think my engineering kind of perspective has helped me in a lot of ways to kind of learn separately and then absorb and then apply it. So yeah, I do think it's put me in a unique position, probably. So
Yeah, because I do find that for most people, because I've worked by now with thousands of people who are just getting started, right? Who start from zero. And most people are intimidated by the graphs and all that stuff. That's definitely something that scares people. I think you're an interesting example of how, your school experience helped you with this, because that's normally not the case, right? Normally
yeah,
people are like so lost, like, how do I get started? But what I tell them is that you don't have to jump straight into day trading. You can if you want, like if that's something that you're interested in, of course you can do that, but there are other ways to invest as well that are more conservative, that doesn't require you to be on a day-to-day basis looking at your computer. For example, the strategies I do, like the monthly contracts, I mostly sell premium. So you don't have to be, paying attention every second. So that's something that I want to make sure people get, is that you don't have to be like a slave to your computer. If you love it and that's your passion, and I know plenty of people who are like addicted and want to be in front of their computers, then that's great because you love it, and why wouldn't you? But you don't have to. That's not the only way you can make money. And
yeah,
everyone should know that now with these online platforms, you can be anywhere, like literally in China, and be investing in the stock exchange that's in New York and Wall Street. There's no barriers. You can do it from anywhere, and you don't need a lot of money. I think that's another belief that people have, that you need to be like so rich to invest. You can start with very little. I know very, very young people, like literally teenagers, who get started just buying shares, like I did when I was a teenager. I started buying shares because that's what's the most simple, right? Like there's nothing more
yeah.
simple to understand what's a share. So if you're very young, you have very limited funds, why wouldn't you just buy a share? So little things like that. There's definitely a lot of things we can do with trading and investing. I would say what you do is considered a little bit more advanced. How long do you think it took you to like get the hang of it?
Oh, a long time. I've probably studied like 160 to 200 hours of like actual like course material, and I just watched the stock market move for like 3 weeks straight. I didn't do anything. I just watched it. I had my computer up, and I did, I was like doing my work on one screen, and I just kind of watch, I'd watch Apple Moot trade all day, and I'd watch the news come in, and then I'd kind of see what it was doing, and then, then I'd go read about it after the market. I'd see what people were saying about how the stock traded that day. So I watched it for a while, months to get pretty good. I don't know. I'm probably not that good, to be honest. But to get where I'm at now, it took me a long time.
Get started. So Nick, I just saw Peter Tuchman, the one, if you don't know who he is, you guys need to look him up. The Einstein of Wall Street. He's on right now. He's watching.
Oh, geez.
He just said, hey guys, hi Peter, happy Saturday. So for the ones who don't know who he is, he's the #1 stock trader in the New York Stock Exchange. He works on the floor for almost 4 decades. So you're not going to get someone with more wisdom. And he collaborates with us, and we're going to be telling you guys how you can learn from the best in Wall Street, because at the end of the day, there's so much random stuff out there, I've noticed, and you really want to stick to people who actually know and come from straight from this world and have all the experience, because it can save you so much pain. Recently, if you guys have been watching the news, there was horrible news about a very young kid who committed suicide because he didn't know what he was doing. He was trading a loan from a Robinhood app, and he lost a bunch of money. I believe he was on a margin account, something beyond those lines, where he lost money he didn't have, which can happen if you don't know what you're doing. And it's a tragedy, because that just shows you how, when you're not guided by real professionals, the pain that you have to go through is not necessary. You can just have a shortcut and learn from someone who's been through it all, and it's not going to allow you to make those types of mistakes, and learn step by step, little by little, and get trained on the most important things, right? It starts with the mentality, the psychology of it. You were in a class with us recently, remember? So,
oh, yeah.
About, going from the basics, we're not going to do anything insane if you don't know anything yet. So, I think it's such a tragedy that happens to someone, but it's like a wake-up call, because so many people, I think they can just get into it and figure it out and sort it out, and the markets and the market makers, for some reason, people think they can. And it's very sad that had to happen. It could have been avoided if he would have been guided by real professionals like Peter, who's with us. He said in the world, not in the stock exchange. I'm sorry.
Well, the New York Stock Exchange, we consider that. Well, that's at the top, so.
You know what I mean.
Yeah. That's, you bring up a really good point, and one thing that I wanted to talk with you about. I think it's a really, in my humble beginner, opinion, I think it's a really unique time to be involved in the stock market, just because of kind of how everything's trading right now. And then just in the United States, the feds are pumping in a bunch of money, and I don't know, it was like $3 trillion or something. And I was reading an article. They said when they started the stimulus, every single stock in the S&P 500 went green. And so now you've got to, basically you're kind of guaranteed to make money, and at the same time, all these people have, kind of stimulus checks that they're now, investing in the stock market. Everything that they put in went green, and suddenly they think, they're really good at investing. And I think that scares me, right? Like, makes me think maybe I'm doing something wrong. I've had some, good success recently, but I think that's important to address. And probably the same situation with, the young man that you were talking about. He probably had some great success, and then it kind of just snapped on him. So what, I guess to focus my question, what do you think, and what makes picking a good stock, or do you want to talk maybe about some fundamentals or things that you should look at or consider before you actually invest?
Yeah, so people just love to, people come to me all the time wanting to learn, and I just love when people are like, oh, Gaby, I have $1,000, what should I do? I have 10,000, 100,000, I have people have $10 million, what should I do? It's very funny, because I'm not here for that, to tell you what to do. I'm here to educate and empower people so that they learn and they make their own decisions. You know, that's the whole point of an educational movement, that it would defeat the purpose if we are just telling you what to do. You're not learning anything. The whole point is for you to be able to choose and be independent financially. So what we focus on is education. I know you were in an intro class with me where we went over the fundamentals, where I tell people we never invest blindly, right? We never invest based on opinion because I think this is a good stock, Peter thinks that's a good stock. That's never how we do it. We go by facts, right? There's something called fundamental analysis where you can access the public documents of the public companies because they're forced to tell us, you know, the potential investors, how much they're making. There are a lot of things you can look at to decide if this is a smart investment before you put $1 in. So for us, it's a really, really, really good deal that, you know, they can share with us. So we're never investing blindly. So that's number one. You have to do your research and you have to do your analysis before you get into something. And then, of course, there's the technical analysis, right? That's extremely important. And probably number one when you're trading, because investing and trading are different things. So if you're trading, you definitely want to get familiar with, well, the things you are familiar with. Maybe you can tell us what are your, when you've had like winning trades, you've noticed a pattern, I'm sure. What do you think has been like the key things that have made you do well?
For like technical analysis, like day trading?
Yeah, right, because that's what you're focused on, right?
I try to, well, it depends. I just try to trade the FANG stocks, like the big one primarily. It's like Facebook, Amazon, Apple, Netflix, and Google. And just because they have a great deal of liquidity, right? People are trading the stocks all the time, so it makes it really easy to get in and out of it like the moment that you want to. So that's a big, I guess that's one thing I really look for is just like these big companies that have lots of trading volume. And then, you know, I'll look at different indicators like the relative strength index and like the MACD. So there's ways to kind of there's some lagging indicators that show like if the momentum of the stock is like shifting up or down. But really it's, I look for like volume, liquidity, and then the trend, obviously, like I look for, you know, certain technical patterns. So if it looks like it's it's going to pop up, or, you know, there's a lot to it. That's like was one overwhelming thing to me, is that there's just a plethora. There's, you know, 1,000 different theories and ideas of how to trade and what to do. But I have some like longer term investments, but recently I've just been doing a lot of kind of in and out day trading, or like buy the stock one day and then sell it the next day kind of stuff. So there's kind of different styles to it too, right? So you have like the day trading and then
there's definitely different ones, and there's no correct one. That's what I want people to know, that there's no universal truth for investing or trading. You have to find what works for you. There are obviously systems and proven methods that work and that we learn from experts who are in this industry for decades, who worked in New York Stock Exchange. Like, of course, who wouldn't want to replicate those systems, right? We have to stick with the winners, which brings me to my other point that you made that I love, is that you are focused on star companies. That's how I call them, the superstars, right? Like Apple, Facebook, all of those. Like, it is really not brain surgery. I think that a lot of people just want to get rich quick, and what they do is they look for penny stocks that are worth cents. And they're always trying to look for like the next Apple, for example. Like, oh, I'm going to spend 1 cent in some random stock and I'm going to be a millionaire in like a couple of weeks. And that's not realistic, right? I mean, I'm not saying that's never happens, just like you can win the lottery, like, right? Nothing is impossible. But realistically, the chances of that happening are slim to none. There's a reason why a penny stock is worth a couple cents, okay? Wall Street is not favoring it. So when we stick with these big companies, the winners, that's when we see the best results. We're also focused on those. I mean, of course, there are the new IPOs and all that. It's way more risky. But if you have good risk management, which is number one, then it's hard to lose money, you know, because you make sure that if you're going down a little, you get out. So and if you know what you're doing, most of the time you're just going to be winning.
Yeah. So so in terms of like fundamentals, say you're looking at a stock like Apple or Facebook or like Amazon, what kind of things would give you like the trigger to buy or to invest in that company like long term?
Yeah. So I always look for an upward trend. So I'm a long-term investor, right? I've been investing for over 10 years. I started when I was a teenager. I went to NYU. I was surrounded by Wall Street. I lived in the Village and all this stuff. So my whole youth I spent in Manhattan. And I just remember that all these companies like Visa, MasterCard, they were like $20 a share, right? But how do you know it's a good deal to invest? For example, you have to look at different factors when you do a fundamental analysis. So I always make sure that there is an upward trend. So meaning you study the last few years, see if there's been growth. Because growth is the main thing for a company. It's just logic, right? Why would you want to invest as an investor? Why would you invest in something that's not growing? It doesn't make sense. So I'm not looking at the documents for like, oh, are they making money? Because I know they're making money. I'm looking at, is there consistent growth? Mm-hmm. That's number one. You also have to look at the cash flow. There are other things that are called EPS, or earnings per share, P ratio, that will tell you if there's a good price or not, right? Yeah. 52-week range. There's like a bunch of things we can consider to make an informed decision, right? The earnings are for me the most important, because at the end of the day, I just want to be with a company that keeps growing. Because if you keep growing, that means you have more clients each time, you have more investors, Wall Street favors you, and I want to be part of that. You know, I don't want to be part of a no-name penny stock that you might think, oh, it's going to explode. And I'm not saying it's not, because there's cases where it has happened, but it's extremely risky. And my personality is I'm more conservative, and I'm more of an investor, although I do trade, but I'm not, you know, doing like scalping, like getting in and out in a few seconds. Like I'm not one of those.
That scares me. Yeah. I haven't tried that yet. I don't think I have like fast enough. My internet connection scares me.
Right.
I feel like you need like the best software and like technology and everything to do that.
Yeah. So there's different types of trading for people who don't know. You know, there's day trading where you get in and out of a trade in the same day. That's why it's called day trading, in the period of one day. So you can be in a stock all day or an hour, right? You have to be really careful, because you don't want to be in it too long if it goes the other way. So that's where risk management comes in. There's also what we just mentioned, the more aggressive ones that you get in and out really quick, seconds or minutes. You have to be really fast. So that's for people who are like, you have to have a specific personality for that. Mm-hmm. And then there's swing trading, right? That you can do like what's called an overnight trade, where you're not getting in and out the same day. You can fall asleep, and then the next day the trade is still there. But you have to like have your strategy clear. I think for me that's number one, just having a specific strategy, having those percentages, you know, like when do I secure a profit? When do I get out? So you never have to doubt and hesitate. That's probably the number one thing I've noticed in beginners, that they're always like, oh, what should I do? I'm like, if you don't know what to do, then you shouldn't be investing with your real money yet. You can always practice with demo.
Yeah. So I know the call you and I had a couple days ago, we were talking about the fundamentals. And so you pulled up like Yahoo Finance. And that's a good place to, so you mentioned like fundamentals. One thing you look at is like their earnings statements and like their PE ratio. So you can go to yahoo.com and like type in the stock and pull up their like their most recent earnings statements and things like that.
Yeah.
That's a good place to start.
Yeah, exactly. I like that, Yahoo Finance. It's a free website. Anyone can go in and start doing their research. You know, it's basically like a Google for finance. So you can look up any public company, right, as long as it trades in the stock market. And then you can do like, I call it like an X-ray for that company. So mm-hmm. It's very, very valuable that you can see it for yourself and you can make an informed decision. Because I would say number one mistake is that people are always like trying to guess or trying to ask others for opinions, or what do you think I should do? Or when it's just so easy to do your homework, do your research, make sure you're basing your decisions on actual facts and not on just random opinions.
Mm-hmm. So you pull up the earnings statements, for instance. So one thing that you look at for these, before you invest in stock, pull up the earnings statement, and what are you looking for? Like consistent growth over the months or the years, or probably both, maybe, I don't know.
Yeah, so definitely over the years, you can see quarterly and also annual, right, earnings. So you can see what they're making every 3 months and every year. And I wouldn't go crazy and study, what was this company making 20 years ago? But it's not as relevant. But you definitely want to, check out how they've been doing the last 5 years, like the most recent earnings, and of course the quarterly. So it gives you like a really good picture of what that growth is.
Okay. And then you're looking for like pretty consistent growth from quarter to quarter. I remember you'd mentioned right around Christmas time, you can expect earnings to go up and then maybe dip the following, and that's pretty normal. That's what you said?
Yeah, well, it depends on the actual company, right? There are some companies, like I think we all know, for example, a credit card company. So like Visa, MasterCard, right? These are credit cards that people use a lot more during the holidays. So it's very interesting when you look at these documents, you will see like a spike, like a bubble during the season, and it makes perfect sense. And then on March, it will look like it dipped, like they lost money. But you just have to remember that specific holidays bring specific results, right? So it's just about getting familiar with those patterns and then saying, okay, it's not like they did bad on March, is that, the last quarter of the year, it's more busy for a lot of companies, like for example, Apple, right? And we know that because we see the stores, how they get crazy, how they have all these promotions, and people just tend to shop more at the end of the year. It'll be very interesting to see this year how they're gonna do, because obviously it's been a very different year for most people, and I'm just very interested in how the behavior is gonna be at the end of this year, like for Christmas and whatnot, after millions of people have lost their jobs and all that stuff, all the craziness we've been seeing recently. It'll be very interesting.
Yeah. I think I'm interested to see how it is too. And it's interesting, the stock market seems so sensitive that the second you get like better than expected results, things just blow up, they explode. Like the jobs report, it was like last week or the 2 weeks before. It was incredible.
Yeah.
One other thing that you had mentioned on our call earlier was the PE ratio. That's one thing that you look at on a company, like when you pull up, when you're kind of doing the X-ray of them, for instance, on Yahoo Finance. Do you want to talk about that a little bit more?
Yeah. So the PE ratio, you basically want to take a look at that number, and that number is going to be different if the company consider a big company or a small company. But historically, the S&P 500, which is the main 500 companies of the stock market in the United States, they've had a PE ratio of 15. So you want to measure it, with that number on mind. So if you see a super high number, then it's probably not the best time, right, to buy a stock, because it can be overvalued. So you want to make sure that number makes sense before you make a decision. All these different things are just tools you can use so that you're making intelligent investment decisions. Because I can't tell you how many people I have, come across who are just randomly investing. It's crazy. Like,
yeah, I've got a story on that. So what you're saying is, so the PE ratio of 15 or so is considered standard, because what you're doing is you're benchmarking that against kind of the market as a whole. So historically the S&P 500 has a PE ratio of about 15. So if you're looking at a company and it's above 15, it's probably outperforming or just overpriced at the time.
Yeah, overvalued. It's a way to measure if it's overvalued or not. So what's important is to just know that it's not like a single factors going to help us determine our decision. We have to use all of these different tools as a whole before we get into it. Like, I know it sounds very simple, like, oh, just looking at this graph, at this documents, income statements, cash flow ratios, like, why wouldn't people do that? But I think either people don't know, or they just tend to get very excited and, you know, just get into a market without guidance.
Yeah.
Which I say it's number one, because at the end of the day, anyone can make money in the stock market, right? Wall Street is real, the stock market is real. Anyone can make money, anyone can buy a stock and make money. And like you said, recently what has happened with the Fed has been crazy. Like, they're just putting in trillions of dollars, and it's like a bubble, and then everyone feels like a winner. Oh, I had some stocks and I won, and you know, and a lot of beginners have made tons of money, which is great. But people have to understand that the stock market's not about making money, who makes money. It's about who can last in the stock market, right? Who can actually stay in for the long term and have consistent results, not for one day or 1 month or a couple of months, but for decades, right? So that's why you always want to be guided by people who have consistently done so. So that's what we always teach people. You know, it's not about anyone can make money. Anyone can right now buy a stock and that's it. But you want to make sure you stay consistent, like with anything in life, right? Like, you want to make sure you're consistent, because that's what gives you the most results.
Yeah. And no, I'm glad you said that. And one thing I was asking you for a little bit of advice the other day was some risk management strategies. So I have a risk management plan that I follow, and I know how much, you know, of my portfolio I can risk on like a specific trade and stuff. But what I have trouble with particularly is like, because I do a lot of day trading, is when to kind of take my profits, and I found this out the hard way a few times. You don't actually make the money until you have it back in your hand, right? So it may be up by $2,000-$3,000, and then if you wait, you know, 20 minutes or, you know, depending on time, on 2-3 days, then it, you know, goes negative real quick. So I had some pretty good calls on Starbucks like last week, and I was up like I was up $2,200, and I got greedy. I was just waiting for it to. I was like, oh man, it's in an upward trend. Like, it's some good news here. I'm just gonna let it ride. I'm probably gonna make more money. And you know, next thing, it was a negative $600 trade, and then it stayed like that for the next 2 weeks. And it was like, you got to be kidding me. So what are some? And I think that's probably a pretty common problem for a lot of people, right? So what are some like risk management strategies? Maybe just like on a basic level, things that you should be
considering. Yeah,
considering.
so that's so funny, because that's so typical for people to not know when they should get out or secure profits. I would say that's probably like one of the main things people struggle with. They're just like, oh, like sometimes I get DMs, oh, Gabby, should I get out of this position? And I'm just like, well, you shouldn't get in before you're 100% clear when you should get out. You know, it's that simple. So always have like that percentage on mind. Like, you really, really want to make sure you know what you're getting yourself into, but that you also know when you want to get out. So have that plan ahead of time. That's what I always emphasize. Just like with anything you're gonna do, well, hopefully an investment, if anyone here has invested in properties or gold, silver, any investment, you hopefully have a plan before you get into it. You don't just randomly go and buy a house with no plan, right? You're normally clear about how long you want to have it, the result you want to have, whether it's investment property or whether you're going to live inside the house, and you know, you're just trying to like not pay rent, and whatever the case is. So always have a specific plan written in advance, and that includes a percentage. So like, oh, when this hits, I don't know what the 2,200 profit was, like, was that, what was it in terms of percentage? Because sometimes we can hear like, oh, a $2,000 profit, but what did that mean in terms of how much did you put in?
It was pretty good. I should have took the trade off. It was at least like 300% profit. I had some really, I read a technical pattern really well, and it panned out exactly how I thought it would. I should have just taken it right off. So it was a highly profitable trade. It was at least a couple 100% profit.
That's a lot. So you didn't invest that much to get that profit.
No, it didn't. It was, yeah, it was unfortunate. But, and that at that, in result of that, I was kind of looking back at my notes and I realized that I didn't actually put together like an exit strategy for that trade. And I think, and that, you know, I try to do some reflection after like the day, you know, I've had some good trades or some bad trades. And that was definitely one big thing that hit me, is that you, at least for the day trading, and I would assume probably for, you know, like long-term investments too, you want to have, like, you want to know when you plan to exit before you place the trade. Therefore, it's like, it's no longer an emotional, it's not an emotional trade. It's just like a common sense, like a technical.
Yeah. Another thing is, like, if you don't want to think about it, because a lot of us, like, you know, are very emotional. I think human beings are very emotional. We have all sorts of emotions. We get scared, we get excited, we get nervous. So a way to not let that get in between you and your trading is to just let the system do the exits for you. So what does that mean? You just pick a percent ahead of time and
screw that one up.
Let the robot make that decision, right? So you're not going to be the one hesitate, oh, should I get in, should I get out? No, that's taken care of. So that's something that I recommend. That's something that I do, because I don't have to be sitting there, you know, monitoring every single thing. I'm just like, okay, I'm either going to make this or I'm not. And if it goes the other way, which it happens with trading, right? Sometimes it doesn't work the way you want it to work. And it's not because, oh, you're such a bad trader. It's because a lot of surprises happen. Like even Trump tweeting can deeply affect the market, or the Federal Reserve having a meeting. There's like
says
a bunch
word,
of...
Yeah. Powell says the word uncertain, and it triggers all of the trading algorithms, and the whole just gone. I was reading an article on that. They were saying that because they have all these high frequency traders like the algos and stuff, and they'll translate like the actual audio, like the dialogue of the conversation. And if he says like the word uncertain, it's like one of those trigger words for them to like start selling stock. It's incredible.
Or the opposite, he says liquidity, right? Then whoa, then we go all the way up. So there's definitely patterns that, you know, we want to pay attention to, and there's definitely surprises. Like for example, a coronavirus, I think it's been a shock to most people that what happened as a consequence, right? Like in the beginning, when they told us that lockdown was happening, it was like, okay, it made sense, maybe for a couple of weeks. But then it kept getting extended and extended and extended. And I don't think anyone thought that would actually happen. So things like that, you know, and then obviously we saw the market fall in March, but then it quickly recovered. So a lot of people have taken advantage of the movements, like the volatility and all the money you can make both up and down, because it's not like when it goes down, oh, you lost money. You can also benefit from those movements if you apply the strategies that benefit when the market goes down.
So what are some good, in terms of like, because I'm an engineer, I'm like a numbers guy. It's like I want to see it like on a spreadsheet. You know, what are some good like risk management numbers or ranges or things that you should like consider when you're about to make a trade or when you're about to invest?
Yeah, so it's all gonna depend. Again, there's no like perfect plan, right? It's all gonna depend on your own risk management. But I'll tell you one that's very simple as an example, right? If you're losing 50% of the trade, so like a stop loss, if it already went the other way by 50%, okay, it already went the other way. So what I do is I just automate that exit strategy. So if it's down 50%, then boom, I'm out. And then the profit taker, if I'm gonna risk 50% of what I just put in, then the profit taker, I'll put it minimum at 100%, right? So then if it goes well, it will get me out 100%. But if it goes the other way, then I'm only risking 50%. What that means in real numbers is that, let's say you're only investing $100, right? You're buying options for just $100, then you're not risking the $100. You're risking $50 because that's your stop loss at 50%. So all it means is that you don't risk all of your money, you risk half of it. That's just one way you can do it. You don't have to do it that way. You can risk 20%, 10%. We talked in the risk management 101 about how you can risk 2%. A lot of big Wall Street people do this because they know that, when you're trading millions and billions of dollars, then obviously you're not going to be like a regular investor. Oh yeah, 50%. Obviously you have to be more strict. And this is where hedge funds come in. My business partner is a hedge fund owner and manager. And he always tells us, he's like, you guys as like single investors, you have so much flexibility. You can pretty much choose your numbers. But when you're dealing with hundreds of millions of dollars, like the way he's dealing with, then obviously you're not going to be as flexible because there's too many rules, there's too many restrictions, there's too much of that. So we have an advantage.
I'm sorry, I almost lost you. My phone fell over.
Did you fall?
No, thankfully I didn't fall. My phone fell. My phone fell. But yeah, no. So you bring up a good point. So depending on like how much money you're trading will kind of help dictate your risk management as well.
Yeah, exactly. So yeah, there's so much to learn. There's really so much to learn. I've personally been a little bit concerned about people who just get into the industry without knowing anything, without doing their homework, without, professional guides, just helping them and guiding them. Because as we've seen with this recent case of this, I believe he was 20 years old or something. It's something that, I'm not saying someone's gonna, kill themselves like he did, but it can have a huge impact in your life if you make the wrong trade. The mistake that can be avoided. It can be avoided if you just learn how to do the stop loss, if you learn risk management, if you learn how you can apply this and actually do it, so then you never feel like you're risking all the money you put in. Investment is always going to have a risk, but you want to make sure you're risking what you're comfortable with, and never with the money that you need. That's something I always tell people, like, don't ever put money that you actually need to like pay your rent or buy food. That'll be crazy. You want to invest with money that's doing nothing in the bank, that's literally giving you 0.01%. And with inflation, as everything goes up, your money is actually worth less. It's not staying the same, it's losing value. So why wouldn't you put that money to work if it's just sitting there? That's the type of money we want to use for trading and investing.
Okay. Yeah, and that's the argument I've heard all the time about, investing versus letting it sit in a bank account, right? Even if you just dumped your money into like a mutual fund or like the S&P or just like the S&P 500 or something like that, you're probably going to get a much better growth. You're assuming more risk, obviously, but better growth than, 1/100% interest rate from sitting in the bank.
Yeah.
Definitely.
Yeah, definitely. There's a lot, to learn. It's a very interesting world. It's not as complicated as it sounds. I mean, it can get a little bit complex if we get into really advanced stuff, but I always encourage people, just learn, learn from the basics, start with like step one, just doing the research, learning about stocks. There's a reason why Wall Street is Wall Street, right? Because it's real. There's a lot of money to be made, and billions of dollars are traded on a regular basis. So that's something that, we can use to our advantage. We don't have to have millions or billions. We can start with very little because, there's something called stocks and options where you can just start with little amounts of money.
Yeah. And you bring up a good point. I don't know how much it's going to cut us off in 12 minutes.
Yeah.
Because these things only last an hour, so we can't spend too much time. But another strategy to make money in the market is like options trading. And I know it's like a it's very complex, but can you maybe just give us just kind of a very high level overview of like what puts and calls are, and just kind of like what an option is if you wanted to start learning more about it?
Yeah, so options are basically contracts, right? They're contracts that you can do to make money in the stock market. So basically, we talked about stocks and shares, how, for example, I want to invest in Apple, I buy a share of Apple. But let's say I think Apple's going to go up. I can either buy shares, right? Of course, if it goes up, then my money grows. Or I can buy a call option, and a call option you would buy only if you think the stock is going to go up, right? So then if Apple goes up, then my call will make money. So I can either buy shares, I can buy a call. There are different ways to make it work. There's also buying and selling of options. So I don't want to confuse people, but just know there are strategies that where you can make money through contracts where a stock goes up or down, right? So you can buy a put option. That's the name of the option that basically means if a stock goes down, then you can definitely make money as well. So you don't only benefit when a stock goes up, you can also benefit if stock goes down. It's just applying the right strategies at the right moments. And for that, obviously, you need technical analysis, because if you're going to be speculating what is the stock going to do, especially in a short-term basis, then you want to be learning this before you apply it. And again, you can start with demo. You don't have to start with your real money. You don't have to go right now and start putting in your real money if you don't know what you're doing. You can start with demo, which are accounts with fake money, right? And then you can just start practicing. Once you know how to use the platforms, once you get the hang of it, once you had successful trades in the demo account, then it's more responsible for you to go into the real account.
Yeah, that's a great point. And that was actually the second step that I used when I was kind of learning about all this. Is so I said I listened to as many smart people as I could, watched as many videos as I could. Then I just kind of watched the market move for a couple of weeks. I didn't do anything. I just kind of watched the numbers go up and down. And then the next thing I did is I opened like a paper trading account. So I traded, but with like fake money to just kind of see how it works. That's a really great comment. And TD Ameritrade. So I use like Thinkorswim, like TD Ameritrade, and they have like a paper trading account. But you can probably just like Google, right, like paper trading somewhere, and you'll be able to find something.
You can just Google how to open a paper trading account or a demo account. Thinkorswim is great. We also use interactive brokers. That's really good for international people because a lot of people who live outside of the United States have some type of restrictions with certain platforms. So let's say if one doesn't, if you don't get approved for one, you can just try another one. And I've noticed that interactive broker is more flexible if you are from outside of the United States.
Yeah. Okay. I've heard of interactive broker. The reason I ended up going with Thinkorswim because most of the like all the stuff that I was learning, like everything on YouTube, like most people are like either using Thinkorswim or interactive broker.
Yeah.
And that was a big thing for me since I did a lot of like self-teaching. And still doing a lot, obviously trying to learn from you. And it seems like most people kind of trade on those two platforms.
Yeah, I would say they're definitely like the most popular ones. And there's a reason when something is very popular, right? It's normally because it really works and it's doing well and they have a lot of clients. So they're trustworthy platforms, right? They're not random. So you can trust that your money is safe. A lot of times I've seen happen that people get recommended random platforms that are not backed by real companies, and that can be a scam. So you really want to be careful with who's backing these platforms. Like with anything, right? Like the classes I'm telling you guys about, and we're going to have a free webinar on July 4th before I forget and we get cut off, that when I invite everyone who wants to learn and who's going to be leading it, it's going to be Peter Tuchman, the Einstein of Wall Street. Okay, everyone go Google him. He's been in the New York Stock Exchange for decades. And David Green, who's a former market maker. And the ones who don't know who a market maker is, basically the ones who move the markets, right? Because of the amount of
big deal.
But yeah, it's a big deal. So these are people we want to be learning from, right? Because they're the real deal. It's not random. And I always tell people, every time you look at someone or at a platform or something you want to learn from, look at who's backing either those platforms, what organizations, or those people, right? So for example, with Forbes, being the Forbes Finance Council, you have to show them the application process. First of all, it's a nomination, then you have to submit your application and whatnot. They have to check, your income. It has to be at least $1 million a year. They have to check your investments to make sure you do well. Like, they're not going to put in the Finance Council a fake person or a random person. So that's something I always tell people. Look at who's backing, that person, what organizations, what actual companies, because that's what's going to determine if someone's trustworthy or not.
Okay. Yeah. So they have. So you've got a free webinar coming out with you and your team, and what are the specific details? So it's on July 4th.
Yes, on July 4th. You guys can go to disruptwallstreet.com. And basically, yeah, it's going to be a webinar. It's going to be in the evening at 7 p.m. Eastern, New York time on July 4th. And we're going to be learning about day trading. We're going to focus it on day trading because, you know, we're going to have a former market maker there who does this for a living. So we definitely want to make sure we learn about that. It will be informative, educational, and we'll be also launching an English platform. As you guys know, I have a Spanish-speaking platform where thousands of people learn with me about this, you know, trading, investments, and all this type of stuff in Spanish, but we're launching an English one. So it's amazing that, you know, that you've been learning with us and that we're doing this so we can give other people the opportunity to learn as well if they want.
I'm excited.
Yeah.
I'm gonna be there. I'll be there.
And I love how it's Independence Day because it represents, you know, the financially independent, which at the end of the day is what everyone wants. And especially now during quarantine, I feel like everyone realized we need to make money from home. We need to make money online. And this is a great way that we can get started, you know, for the ones who haven't.
Mm-hmm. Excellent. So I will, I'll obviously keep like my followers informed. I'll post the link and let them know it's coming. And because it does, I mean, sounds like an incredible opportunity, and it's totally free too, which can't get any better than that. So that's really cool. I appreciate you sharing that with us, and hopefully to be like a good resource for kind of all the younger people like myself who are trying to make some money off the stock market.
Yeah, and avoid tragedies, right? People who just go off and then they get in trouble. That's the main thing. We want to avoid all the pain, all the mistakes, all that type of stuff, and just be guided by real deal professionals that are verified, that you can look up and have all the organizations, all the experience backing them, all the credentials. Like that's what's key here, and that's what makes us different, right, from everyone else. That nobody has the New York Stock Exchange people teaching. So this is definitely a great opportunity for everyone.
Yeah, that's one thing that we talk about with model trainers. It's like you probably wouldn't take financial advice from like a carpenter, right? Why would you take like health and fitness advice from somebody who isn't fit and healthy themselves?
Exactly.
So perfect translation to that. You should makes a whole lot of sense to learn from people who are kind of living it and make good money off of it, and who are involved in actually kind of the making of the process. So very smart.
So it's disruptwallstreet.com. You guys can go to that page right now. It's only a couple of weeks away. I can't believe it, but I'm very excited. I know a lot of people, are going to be celebrating during the day. Well, who knows, right? There's still all types of restrictions, but in the evening, hopefully everyone's home with some downtime, so you can just tune in, for an hour to learn.
Excellent. So we only have a few minutes left. Why don't, let me just try to recap everything, and then you correct me when I make mistakes. Is that fair? So it's very important to have a good idea of the stock that you're investing in, and basically do some fundamental analysis, or understand, make sure that you really truly believe that it's a good stock. So one way to do that, or maybe the first place to start, is to kind of do some fundamental analysis. So we talked about Yahoo Finance. So if you go to Yahoo, it's yahoo.com/finance, or you just Google Yahoo Finance, you should be able to find it. And you can find the earnings reports for all these companies. One thing that you want to look at is probably consistent or some type of upward trend in terms of growth and earnings. Another thing to look at is the PE ratio of the stock. So assuming the S&P 500, historically it's about 15. So if you get a stock that has a PE ratio of maybe 50, it's probably overvalued. You may need to do a little bit more research in there to figure out if it's really a good buy. And then in terms of more of the risk management side, something that I struggled with, it's important to have an exit strategy, or to understand kind of how much risk you can tolerate. So that's one thing I screwed up, is I let a really profitable trade go really bad because I didn't have a stop loss on it. So if you're day trading, I know, right? I did well otherwise, so it was, yeah, you know, it didn't hurt that bad. But so if you're day trading, you know, you want to have a stop loss or some type of limit order to kind of mitigate losses, but also hopefully get the most, you know, profit out of a trade. And then risk management strategy, right around like 1 to 2% maybe is, it depends on like kind of how much money you're trading with, but maybe 1 to 2% of like your overall portfolio.
That's a good way to put it.
Yeah, a good one. And then what else did we talk about? Thinkorswim and
Thinkorswim, interactive brokers. You can use Yahoo Finance to look at all these things we're talking about. It's a free website. Just get familiar. Just start reading, start learning, you know, but get started. Because it's something that, you know, people have actual results every day with the stock market, right? Wall Street is Wall Street for a reason. So just let's get educated, right? And let's not, you know, be those people who are like resigned and cynical. It's like, oh no, this doesn't work. No, it does work. You just have to learn, and like anything in life, put in the time and the effort to have the results.
Yeah, and that was a great segue into my last summary point: putting in the time and the effort, and educating yourself, learning from people who know what's going on. Obviously, you know what's going on, and you and your team are offering a free webinar on July 4th, 7 p.m. Eastern. And what's the link one more time?
It's disruptwallstreet.com.
Gotcha. And I'll post it up for you guys.
You'll post it? Okay.
Yeah, everybody who's still on the call, I'll let you know. I'll send some links.
Yeah, because you can click from here. That's right. Yeah. Okay. All right. Well, Nick, that was awesome. Thank you so much for your time and for having this conversation. I think it was very valuable. I hope it helped people, gave them some tips, some insights, and I hope everyone joins us on July 4th.
Yeah. Well, I mean, I should be the one thanking you for your time. It was, you know, you got a lot going on, and you're an important person, so I really appreciate it. And I certainly learned a lot. Hopefully everybody tuning in did too. It looks like, I don't know, I thought it was going to kick us off. Do you want to stick around for just like 2 or 3 minutes if there's any questions?
Oh, it's going to tell you, right? It's going to give you the timer or no?
I don't know. I don't do these too often, but I haven't got a timer yet. So do you want to just field like just 1 or 2 questions before we hop off? Just see if there's anybody who, I was trying to monitor as we were going. I was also trying to block mean people too. So
yeah, sure. If anyone has, you know, any questions or anything, then yeah, I'm glad people stayed for the whole hour. I know it's a lot of information and it can be new. It can be a little bit like, it can sound a little bit intimidating. Anything that's new though, I just want to, you know, make that clear. It's not just the stock market. Anything about any subject that's new is going to sound a little like out of your comfort zone, but that's the point, right? And that's where the growth is. Mm-hmm. People are saying, please save it. Will you post this?
Yeah, I'll post it, guys. Don't worry. I'll post it on my, I'll do like an IGTV. It'll post the whole thing. Do you guys have any questions for Gaby before we sign off? You've got her live right now. I just asked questions for an hour, so I will yield the mic. If not, maybe I can field a few, send them over to her if you guys think of others. So.
Yeah. Okay, cool. Okay, someone has a question for you, Nick.
Uh-oh. It's probably a fitness question. What is it? Whoa, it's Tony. You have a question for us?
And thank you guys. I see all the people thanking us for this live. Thank you guys for joining. It was really fun to share. I love this, you know, like, I'm sure you can relate, like, fitness, right? Your passion, you get into it. I get into this, so I just love talking about it, and I get so happy when I see people like you, right, in their first year and making money. It really shows everyone what's actually possible for them. You don't have to have 40 years of experience to make money. You can start making money, but of course you have to get prepared first.
Yeah, that's that was one thing that it took me a long time to learn, but I understand what you're talking about. So
someone just asked me what got you into trading.
Yeah.
I went to NYU, So I lived in the village, and I was surrounded by all this like young Wall Street traders. So I started hanging out with them, and I was like, oh my God, they're making so much money. They're so young. So it's obviously not age, right? I can start making money too. So they showed me what was possible for me. And that's when I got into like shares with the little money I had when I was a teenager. And I'm so glad I did, because that has paid off in zeros. So I'm very proud that I was brave enough to say, I'm just going to do it. I'm not going to be that person who like is just cynical. Oh no, this doesn't work. It's like, no, like, let's do it. Let's at least give it a shot.
Yeah. Very good. Excellent. Well, it doesn't seem we're having too many, I guess, finance related questions pop up. So we're probably safe to call it a day here. I'll let you know if I get any stragglers come in and have some good questions, I'll share with everyone. So.
Cool.
Excellent. Well, it was really great to see you and talk with you again. Like I said, I really appreciate your time. This is a lot of value added. I certainly learned a lot, so I appreciate it. And I speak for everybody, I think, on the call. So.
No, excellent. Thank you so much. It's always a pleasure, and we'll be in touch, I'm sure, right? Talk about trades and stuff.
Yeah. Okay, well, you have a great night. It's good to see you. Take care. Be safe.
Good night. Thank you.